Hey, welcome back to my channel, Iraqi Dinar News Update. Here's the Central Bank of Iraq has imposed more than 24 billion dinars in fines on banks and financial companies. The Central Bank of Iraq has imposed more than 24 billion dinars in fines on banks and financial companies, Shafaq News, Baghdad. The Central Bank of Iraq announced on Saturday that fines imposed on banks and non-banking institutions, exchange companies, amounted to more than 24 billion Iraqi dinars over the past 3 months. A table from the bank, seen by Shafaq News Agency, showed that fines imposed on banks and financial companies during the past 3 months, starting from April until the end of last June, amounted to 20,942,377,239 dinars, at least compared to the first 3 months of the current year, when penalties amounted to 41,268,578,075 dinars. She explained that the fines also included 23 administrative penalties for these banks and non-banking institutions, distributed between warnings, notices, and grace periods. Showed that April saw the highest fines on banks and non-financial institutions, amounting to 9,862,848,520 dinars, with 12 administrative penalties, while June saw the lowest fines, amounting to 6,022,501,325 dinars, with 3 administrative penalties. The table did not show the names of the banks that were subject to fines and administrative penalties. The Central Bank of Iraq CBI's announcement that it has imposed more than 24 billion Iraqi dinars in fines on banks and financial companies during Q2 of 2025 is not only a matter of compliance enforcement, but also a strong indicator of the broader financial and monetary strategy being implemented by Iraqi authorities. To fully understand the impact of these penalties, particularly in the context of the Iraqi dinars IQD, Vietnamese dong VND, and foreign exchange markets, we must examine the following dimensions in depth. Overview of central bank penalties, purpose and trends. 1. Penalty amount and timeframe according to the CBI statement published by Shafaq News on July 26, 2025, April to June 2025. 24.94 billion IQD January to March 2010. Total fines of 41.26 billion IQD. There was a 39% decrease in fines between the 2 quarters. 2. Breakdown by month, April 2025. IQD in fines, 12 administrative penalties at June 2025. 0.2 billion IQD in fines, 3 administrative penalties. These numbers reflect active regulatory oversight and potentially improving compliance rates by mid-year. 3. Types of penalties, 23 administrative sanctions, including warnings, formal notices, grace periods for correction. These are non-monetary sanctions that aim to correct institutional behavior without immediate financial loss. 2. Why is the central bank imposing fines? 1. Strengthening anti-money laundering examine and counter-terrorism financing. CTF, the CBI is under international pressure, especially from the US. Treasury and IMF to tighten controls on suspicious remittance flows, money laundering schemes, informal hawala systems that bypass formal X channels. 2. Enforcing official dinar to dollar exchange controls. Many banks and exchange houses sell dollars at higher parallel market rates. Fines are a deterrent against violating the official exchange rates, currently at 1320 IQD USD. This supports the government's broader plan to converge official and parallel market rates. 3. Ensuring compliance with licensing and digital payment regulations. The CBI has recently implemented reforms to digitize the payment ecosystem and reduce cash dependency. Non-compliant banks and financial institutions that fail to integrate these systems are penalized. Implications for the Iraqi Dinar IQD. 1. Improving confidence in the IQD by cracking down on violations. The CBI signals to local and international markets that it is serious about enforcing transparency. This enhances public trust in using IQD over USD in daily transactions. 2. Stabilizing exchange rate volatility. Fines help close the gap between official and black market rates. This brings stability to the value of the dinar, which is essential for investment imports and inflation control. 3. Strengthening the case for currency revaluation. RV, although no official RV has occurred, such enforcement measures are preconditions to restoring the dinar's strength. Regularization of exchange flows and digital finance usage prepares Iraq for potentially unpegging from the dollar or joining IF, special drawing rights SDR frameworks. To IV. Relevance to Vietnamese dong VND and other currencies. 1. IQ VND exchange market dynamics. While there is limited direct trading between IQD and VND, both currencies share similar monetary challenges. Both are non-convertible currencies, meaning they are not freely traded internationally. Both are highly controlled by their respective central banks. Their values are often linked to US dollar transactions due to trade dependencies. 2. Parallel market pressures in both economies. Vietnam, like Iraq, has battled with black market X dealers and unofficial exchange rates. The State Bank of Vietnam, SBV, and CBI both penalize unlicensed money changers. Both central banks are trying to bring remittance flows and cross-border transfers under state oversight. 3. De-dollarization and digital finance. Vietnam and Iraq are on similar paths, promoting domestic currency use, cracking down on USD hoarding, expanding digital wallets, QR code systems, and real-time settlement platforms. CBI's crackdown complements Vietnam's own tightening of FX rules and digital payment expansion, reflecting a broader global push towards sovereign monetary systems. 2V geopolitical and economic context. 1. U.S. Treasury involvement. The halt of U.S. cash dollar shipments to Iraq and sanctions on certain Iraqi banks for non-compliance has forced the CBI to prove its commitment to transparency aligned with Spot FTF and IMF standards. This is particularly important for Iraq's foreign reserves being held abroad in dollars and gold. Gold reserves and Basel Purther compliance, with Iraq holding over 53 tons of gold and working towards Basel compliance. The CBI must ensure financial institutions are sound, which includes penalizing non-performing banks, removing bad actors from the financial system, ensuring regulatory discipline as a prerequisite to gold-backed asset integration to VI. Looking ahead, broader impacts on dinar revaluation and monetary policy. 1. Preparing for structural monetary reform, the cumulative effect of enforcing fines, reducing cash dollar dependency, strengthening reserves, promoting digital banking, is the gradual positioning of Iraq for a possible currency redenomination or revaluation. 2. CBI's credibility and investor attraction. These fines improve Iraq's financial reputation among Gulf investors, especially UE and KSA international financial institutions, IMF, private investors looking for stable frontier markets. 3. Implications for citizens and domestic business. Increased compliance by banks may reduce black market spreads. Citizens could get better access to banking services, especially in dinars. Merchants may increasingly accept electronic IQD payments instead of USDD. Conclusion, the Central Bank of Iraq's fines totaling more than 24 billion IQD in Q 2025 serve a much larger function than mere punishment. They are a reflection of Iraq's struggle to build a transparent, lawful, and efficient financial system, reduce dependency on the US dollar, stabilize and potentially strengthen the Iraqi dinar, prepare for regional integration, global compliance, and future currency reforms. The link between these fines and broader developments in IQD valuation, electronic banking, US policy, and global monetary reform, including comparisons to Vietnam's dong, cannot be ignored. As these regulatory efforts continue, they bring Iraq one step closer to asserting monetary sovereignty, essential for any meaningful revaluation or economic breakthrough.